The System and Client Created calculations on the Translated tab of the Consolidation Process screen are executed against the parent currency data of the Level 0 members of the Parent Total Consolidation Dimension member, including the Level 0 members of Entity Total. Parent currency data is specific to the default currency of the parent of the entity. So, this data is parent-child specific. If an entity resides in more than one branch of the entity hierarchy, then multiple instances of the parent currency data are stored on a parent-child basis. The calculations on the Translated tab are also processed if data is translated to a reporting currency. After the translated opening balance is carried forward, default translations are applied to all other movement members based on the default translation settings. To manage default translation settings, click Translation Overrides and then select Manage Defaults. The Description tab explains the distinction between a periodic translation and year-to-date translation. After default translations are applied, client-created translation override rules are run and then any entered override amounts or rates are applied. The administrator can create the rules by clicking on Translation Overrides. You can manage translation override rules from the Manage Translation Override Rules screen. Click here to create a new rule. Clicking on the name of the translation rule opens the Rule Design screen. Click the link to the video configuring translation settings and creating translation rules in the description to understand how to create and manage translation override rules. You can create additional exchange rate accounts for use with translation override rules. You can create 3 additional global rate accounts and any number of local rate accounts. Rates that are entered to global rate accounts apply to all entities, while rates entered to local rate accounts apply only to the specific entities to which the rates are entered. Also, local rate accounts for specific entities can only be used for translation override rule. The administrator of the application creates a custom calculation rule. These insertion point rules are executed in the sequence in which they are displayed on the screen. After all translation steps have been completed, the foreign exchange variance for opening balance and for current period movements is calculated. The closing balance is assumed to require a derived translation at the ending rate. The FX variation calculations bring the aggregated closing balance to the required translated value. The FX calculations are performed individually on all financial level 0 accounts except the historical accounts that accumulate their FX calculations to the cumulative translation adjustment or unrealized gains and losses on translation accounts. Note that financial level 0 accounts do not include saved assumptions. The logic of the FX variance calculations is outlined in the Description tab. The translated closing balance for all accounts with an exchange rate type of historical rate override, or historical amount override should be presented not at the current period ending rate but at an accumulation of the period by period movement translations. For these accounts, the FX calculated for each account is transferred to the cumulative translation adjustment account or unrealized gains and losses on translation account depending on the application configuration. This transfer is a two-sided entry in the FX to CTA or FX to CICTA movement member to ensure that the balanced balance sheet remains in balance. The remaining system and client created rules are similar to those applied to entity currency. Click the link to the local currency video in the description box below to understand how these rules work. However, these rules are applied to parent currency and the additional parent input consolidation dimension member. To learn more, visit docs.oracle.com.